$1.77 trillion. That is the staggering valuation we are looking at right now.
Hello everyone, welcome back to AI Market News. Based on available data, we have a truly historic IPO on our hands, some major macro whiplash, and we really need to break down exactly what all of this means for our portfolios today.
Section 1. Iran deal ignites market rally. Geopolitical de-escalation overpowers data.
Thursday brought some intense market whiplash to all of us. Planned strikes were suddenly called off, signaling a potential peace deal with Iran. And as you can see in the chart, Brent crude dropped sharply right after that peace signal. Oil began trading down toward the $90 range, reacting pretty much immediately to the reduced threat of supply chain disruptions over in the Middle East.
So why exactly does oil impact the broader inflation story? Well, it is pretty straightforward. Lower energy prices significantly reduce shipping, logistics, and manufacturing costs for businesses everywhere. When it costs less to move and produce goods, that financial relief eventually trickles down and it cools the overall inflation we all experience at the consumer level.
The graph shows exactly how equities reacted to this news. We saw a massive 930-point upside reversal for the Dow Jones. The market rapidly adjusted, basically pricing in a world where a sustained pullback in energy prices means peak inflation might finally be behind us.
Section 2. Inflation data sends mixed signals. Hot headline versus cooler core. Now, right before that geopolitical relief arrived, the May Producer Price Index, or PPI report, landed with a very mixed verdict and initially put some heavy pressure on futures. Let's dive into these numbers. We saw an alarming 6.5% wholesale inflation read on the headline, but a softer 4.9% core reading. So why the stark difference? Well, stripping out the highly volatile energy and food prices reveals a slightly calmer underlying price trend. That massive headline surge was largely driven by a 10.7% jump in the energy component alone.
As you can see in the chart, the bond market had a very volatile reaction to these mixed signals. The Federal Reserve is understandably anxious right now because they have to navigate a remarkably strong labor market combined with the stubbornly high wholesale inflation, which is obviously a very delicate balancing act for them.
Section 3. Historic SpaceX IPO debuts today, the largest IPO in stock market history. Shifting over to major corporate news, SpaceX officially lists today on the Nasdaq at $135 per share, completely cementing its status as the largest IPO in stock market history. And setting the stage for this, the graph shows the Nasdaq added 1.35% yesterday, creating a remarkably strong and optimistic market backdrop for this unprecedented technology debut.
Let's examine the actual mechanics of this debut. The company raised $75 billion, but the freely tradable public float is just 3 to 4% of the total shares, coupled with a 366-day lockup for insiders and institutions. So why does this structural setup basically guarantee extreme volatility? Well, when massive institutional demand tries to forcefully buy into a tiny available supply of shares, price discovery can become violent. It can move the stock dramatically in either direction right out of the gate.
Section 4. AI additive, but Adobe slips. The AI versus software trade.
Moving to the software sector, Adobe reported its second quarter earnings, which provided a crucial tell for how the AI versus software trade is currently resolving in the wider market. If we compare the record revenue of $6.62 billion on the left with the stock actively dropping 5 to 6% after hours on the right, we have to ask, why the negative reaction, despite a revenue beat? The reality is, investors are demanding massive step-change results to justify buying into these high-priced software names, not just incremental beats. Furthermore, the announced departure of their CFO right before a critical Fed meeting week just added unwanted leadership uncertainty.
Section 5. Yen and Nikkei market outlook. What this means for Japanese portfolios.
Bringing the focus closer to home, we really need to address how these sweeping global macro events directly impact our local Japanese portfolios. As you can see in the charts, comparing the Nikkei and the USD/JPY, these domestic markets remain highly sensitive to both fluctuating U.S. Treasury yields and local central bank policy shifts.
Let's detail these local market factors. Bank of Japan rate hike odds are currently holding steady at over 65%. Why is this so critical for all of us?
Well, rising chances of a Bank of Japan rate hike naturally strengthen the yen, which puts pretty heavy pressure on the overall profitability of major Japanese exporting companies. Add to this the sudden hospitalization of BOJ Governor Ueda and today's Japan SQ settlement, and we have got a very complex local trading environment on our hands.
Section 6. Week Review and What's Next. Navigating the Macro Whiplash.
Now, let's zoom out a bit and give a quick recap of how we all successfully navigated this incredibly volatile week of trading. Our week started with deep inflation fears surrounding the CPI shock, followed by a surprisingly hot PPI report. But the narrative completely shifted by Thursday afternoon, when immense geopolitical relief from the Iran peace signal overpowered all that hawkish economic data. Today, we close out the week balancing the massive SpaceX debut with local Japan SQ settlement dynamics.
Looking at the economic calendar, according to current market information, we are expecting the preliminary Michigan consumer sentiment data to be released today at 10 a.m. ET. With inflation fears battling geopolitical relief, the ultimate question really remains: are we looking at a genuine market recovery or just the eye of the macro storm? Thanks for watching. Please subscribe and hit the like button.
This explainer was automatically generated by Notebook LM AI. AI-generated content may include errors. This explainer does not constitute investment advice. For full details, please check the description below.